Good morning, all. This is Paul from Camelbacktrading.org. Saturday morning, just about 9 a.m. and figured I'd do something to help people, especially newer traders, and what I do to prepare for the day's trading every day in SPY, or for whatever you trade for that matter. At the end of the video, I'll have a sheet up that shows you all the steps I go through. It seems like a lot, but these are things that once you start doing them, they come to you just basically second nature. And it's just like a checklist that should help you as you go on to trade. So, first and foremost, whenever I do my videos, you always see I have 3 destinations or reference points for both the upside and downside. Now, they're not there just for the sake of putting them there. They're there as areas that you are looking once you enter a trade or as the market's forming to see if the algorithms and short-term traders take them to those destinations. So you should always have 3 upside and downside. And I'll use Friday. I know some of this is a little bit repetitive from what I did last night, but I think it helps. So you heard my first upside destination on Friday is the price probe, which is L's low. So we closed all the way down here. So depending on where we open, obviously if we open below L's low, that's your first destination. Again, that's before any other market generated information, including your overnight high. So if, for argument's sake, we start trading up, your first destination if you're long would be the price probe. Then it would be, we were 12 wide. That's a very visual area. That's a destination that if you get accepted into M's range from Friday, you should go to. And then above that would be the daily high. Same thing on the downside. Depending on where we open, your first destination would be yesterday's low, then the afternoon pullback low from the 19th, this previous day's low. So you always should have at least 3 destinations and reference points. I have destinations and reference points going back 8 years in SPY, all the way back to the $150 level. These are there so when the market does start getting turbulent, you have these things ingrained in your head and you know where the market should be reaching for at some point during that trading day. Number 2, what is the monthly, weekly, daily charts telling me? Now, I don't have the charts up, but you see when I do these on the videos, I go through them every day. And it's important, even though we're day traders, to know what the longer term, intermediate term, and the daily term time frame is doing. And right now, it helps put things in perspective. Like I said, we're in a 9-day balance. We're basically in balance in the monthly and daily, even though in the bigger picture is balance on all of these. But the monthly is an inside month up. The weekly is up with an inside week. And the daily is actually one time framing down for 4 days with an inside day. But in the bigger picture, when you look out, you see that basically they're all in balance. And that gives you a sense of your mental reserve is critical. And when you have these things at your disposal and you know what's going on, it makes it a lot easier to focus on the trading. Number 3, what is the overnight inventory? Long, short, or neutral? That's very important. So here's the overnight from SPY from 4 p.m. to 8 p.m. Now we close down here. This market was short. Is it long? It is long, but again, you have to put it into perspective. It's long, basically, below M's low and certainly below the price probe's low. So everything has to be put into context. Now we'll have to see Monday from 6 a.m. to 9:30 a.m. where we trade. If we continue to trade in here, then again, these are just shorts covering from when N pushed it down. If we start trading up here, then that might be short set of covering because they're a little worried that this was just price going down. And we'll go over that in a minute. So that's very important, your overnight inventory. Next, which option strikes will I play? What will I start with today? Now, 90 to 95% of the time I play with in-the-money options. So on Monday, whether I'm playing Monday's expiration or Wednesdays or whatnot, if I'm playing Monday's expirations and we open, say, between N's low and M's low, I would take a put play. So L's low, whatever L's low was, and I'll tell you that in 1 second, because that's a destination and a reference point where there should be sellers. So that was 350, 557. So maybe I play a 356 put. If, however, we open above L but below B, and now I'm looking to take a call play against M's low because I'd be out below there. Well, M's low is 355.25. Maybe I play a 355 call. So again, that's something you need to decide prior to the opening and where it's trading. And then again, those evolve as the day starts. Next, where will value build today? Very important. Value was overlapping a high yesterday. Yes, price pushed down, but for the most part, value was overlapping a higher. On days that value is totally higher, you should be looking most likely to be a buyer most days. And when value is lower on the day, looking to be on the sell side. But again, you have to try to put in your mind as the days evolve, where will value build. Next, and this one is extremely important to me, the opening. Whomever wins it has a very good odds to win the day. Here's yesterday's opening. We never saw it again. They tried in D, they tried in E, but we never saw it again. So your risk reward each time you started getting back up to it later in the day got better to take a short. You knew you're out. Now we did go 12 wide, so even though sellers basically controlled the day because they were below the opening, they didn't really get much for it at all. It was very rotational until, again, L and M. But you can look at other indices. Here's a beautiful one. Here's the Russell. Here's the IWM. They opened 4 time frames it took. But finally, direction was given in the 5th time frame. E period never got the opening. And guess what? We never saw it again. They actually, 1 time framed up. They went trend for a little while. Now, they did get very wide. They failed above the previous day's high. But look at this pullback in L. Now, I don't usually like using L as a pullback low or rally high. But look at this. Never even got to the opening. And look where M ended up trading at one point. Yes, it came down, but you had a decent risk reward for a long there. So the opening, critical throughout the day. Look at this day here. We went back and forth through it 7, 8 time frames before I never got to it. You think that was a little nuance? I talk about nuances all the time in my room. That's an incredible little nuance that turned huge as finally J and K ripped higher. Nuances. So the opening, incredibly important. Who am I competing against today? Short or long-term players? There's a big difference. I had this discussion in my room yesterday. There's always long-term players in the stock. The question is, are they dictating the action or are they going along with the action? Especially in the ETFs. There's always going to be big-time players and long-term players in Exxon and IBM, but a lot of times they don't dictate the movement. They let the short-term players and algos do it. Same in the SPY. We got to such incredible visual. When you're getting to an incredible visual level and you stop, those are short-term players. Thursday was a perfect example. We gapped lower, pushed down, and we got to within 13 cents of last month's high, which is the inside month. Look at even yesterday on that push lower in the after hours. Almost got to it again. That's short-term players. Short-term players could be vicious. We can have incredible moves and you could have very good volume. But I can assure you, short-term or long-term sellers would not gap lower, push to last month's high, which is inside month, trade 8 wide or 9 wide, and then rip higher like that. They're not going to allow that to sellers, plain and simple. So knowing your competition, who you're playing against, who you're competing against is huge. As the day forms, will we be rotational, trend? Again, that's things you have to put in your head as it's forming. The indices play a big part. Here's the triple Qs. At one point on Thursday, they had a perfect P shape until they get that little unicorn effect at the end of the day. But at least you know during the trading day, each new high, you could basically have faded it. So what kind of day is forming is very important to try to put in your head. Now, I wouldn't put it in my head in A and B, but as the day starts evolving, you try to, are we going to be rotational? That's the next thing. Will we be rotational? Will we be trend? That is absolutely critical in what we're looking at. The indices do play a big part in that. If we're pretty much P-shape on a day, and the indices are up pretty good, then I would look for that afternoon pullback, because with the indices being strong, the odds are if there's just weak longs getting out, it will eventually come back. However, if you have a P-shaped form and the indices are unchanged or down, well, then the odds of that might be less. That pullback might become more because the indices overall aren't supporting that move back up to the day's high. So very important. All of the above help in determine if the algorithms are readable to me. Short-term traders and short-term quant and algo guys use these destinations and reference points incredible. And you can and should use them to your advantage. You will never be faster than an algorithm. You have to be smarter than them and have to try to be able to read them. Now, you know how I feel about the news. I certainly think the market makes the news. However, once a headline or a tweet of any substance comes out, those readable algorithms become increasingly agitated and frisky. That's when it's best to let them settle down. Especially during these Trump years, whatever he tweeted, the market would go nuts. Or with the China trade deal, or with the Fed. Does that mean the market or the news is making the market? No. Might be a catalyst for a time frame or two. But then the next day, a Trump tweet comes out and we flush, and then the next day you're back to where you were trading. Well, that's how is the news making the market if you're right back where you were? But it does make them agitated and frisky. Best to let them settle down before you take a trade. And then another thing that I talk about all the time. These are the 3 best things to help you become a successful trader. Know yourself best. Plain and simple. Know what kind of trader you are. You have to know that before anything else. Then you have to know your competition, what we just spoke about. And third, you have to know the product you trade inside and out. You can trade 5 or 10 stocks a day or ETFs a day, but if you don't know the intricacies of all of them, like the back of your hand, at some point it's not going to work out. And the last one, and this is incredibly important, is M period is very unpredictable at times. However, it is a great guide for the following day or days going forward. Just look at this past week. Basically, we had a balanced week, but look what M period did. Basically, all week, or the last 5-6 days. Look what it did on the 13th. Now, that was a good guide. We gapped higher, held the gap. So it was a good guide, that price probe held. It tried again the following day. This time, didn't work. We opened all the way down here. Look at M period from the 18th. Look what it did. That's just price pushing down. And then we spent the last 2 days basically trying to take it all back. Now, yesterday is another perfect example. What happened in L and M? And L, like I've said, and for those of you who follow me know I've said this many times, what L has followed in M's footsteps. Is this just price pushing lower after being 12 wide? Well, we won't know till Monday morning. Does that mean we're coming out of an inside day to the downside because we flushed like this and we closed at the low? Not necessarily. If this was just price going down, price is just an advertisement. If this is just price going down, weak longs getting out, shorts piling in, well, we'll see Monday morning. Does it continue and we go lower? If it does, then great. Then you have an idea to get short. You're coming out of an inside day and out of an inside week possibly, and a short play is awesome and nothing changes until you get back into M's range from Friday. However, if we're to open smack in the middle of M's range and come back up to that very visual POC, then for me, nothing really changed from Friday except shorts pushed down and failed for the most part. I do these steps each and every day. Now, they seem like a lot. Are they a lot? I don't believe so. Again, once you start doing them on a daily basis, it'll come to you second nature. So, I'm trying to see if I'm trying to put up, I apologize, I think I have it up. There it is. So there is what I just went over. Print it out. Put it on your computer. Use it to your advantage. See if it works for you. Again, all of these will come to you in time like second nature without even looking at them. Thanks for your time. Have a great weekend, and we'll speak prior to the opening on Monday.